Hi, welcome back. Thank you for joining this next session. We are very privileged to have with us a panel of VCs who are going to cover the area raising capital, which is slightly important. We've looked at strategy, and now we're going to look at how we're able to implement that strategy and raise capital to do that. So without further ado, I'm going to hand you over to Moran, who will introduce himself and the panel. Thank you very much, guys, for joining us, and look forward to a good session.
Thank you, Johnny. Appreciate it. Hi everyone. Thank you for joining. My name is Moran Levinovitz. I'm an investment director at HSBC, and I'll be moderating this great panel with some fantastic panelists. So the topic today is kind of raising capital in the pandemic age, obstacles and opportunities. A wide and very live topic. So I'm welcoming an interactive discussion with the panelists. Our panel kind of includes a wide range of backgrounds and stage of investments, geographies, etc. So we'll start with a round of intros and then dive into a few topics like the fundraising environment, the impact of COVID on fundraising processes, some do's and don'ts maybe for companies and entrepreneurs who are interacting with VCs, and then maybe see if some panelists have some smart guesstimating of what the next 12-18 months are going to look like kind of in the VC and fintech landscape. Reminding everyone there's also a Q&A section, so anyone watching this that feels like asking any of the panelists some questions, feel free, and we'll leave some time to do that in the end. Brief intro on myself, HSBC Ventures. We invest in technology companies on behalf of HSBC in a broad range of enterprise software and fintech companies in different stages. And now I'll hand over to the panelists to introduce, and I'll go kind of screen-wise as far as I can see. So start with Vigdor.
Great, thanks, Moran. Hi, everyone. Pleasure to be here. My name is Vigdor. I'm a general partner at Viola Credit. It's a private credit fund, part of the larger Viola group, largest technology investment house based out of Israel. Viola Credit, we focus on providing and focused on the fintech payments and insurtech space, providing financing solutions, including lending capital, regulatory capital, and other needs in terms of financing for the entire fintech ecosystem. That's in a nutshell. We operate highly in Israel, Europe, and the US.
Thanks, Ido. Oi.
Hello, everybody. Thank you for having me. My name is Roy. For the last 6 years, I've been running Google startup programs around the planet. Came back to Israel, established N Ventures, which is a fairly new venture fund in Israel focusing on company building. We drive accelerators in Israel to create deal flow. We drive a corporate network around the world for validation. And we also build hubs for our startups to be able to go global in Tokyo, in New York, in Bangalore, and other locations. So really building a platform to support early stage startups in Israel.
Thanks, Roy. And last but definitely not least, Tim.
Good morning, everyone. Tim Levene, CEO and founder of Augmentum Fintech. We are a UK-centered fintech fund, specializing, the name gives it away, in fintech. Our focus is across Europe, and in recent years that would include Israel as well. We currently have 20 companies in the portfolio. What makes us a little bit unusual is that we're publicly listed, so we're a closed-ended investment trust on the main market in London. So in our words, democratizing access to venture capital for institutional investors and also retail investors as well.
Great. So thank you for the introduction. So I think the first topic kind of to introduce is maybe talk a little bit about the current funding environment in your kind of respective geographies, whether that's kind of Europe, US. I can just broadly say that, you know, if we're just looking at the US as a barometer for the rest of the world, we're looking at quarter-on-quarter growth of 120% when it comes to fundraising. So around 62 billion in Q1, and that's 60% up from Q4 last year. So obviously the market is very strong right now for fundraising. Lots of mega rounds, you know, literally hundreds of companies raising rounds of above 100 million. So it seems like, you know, market is super hot, which is surprising or not, considering, you know, what we've been through and what we're still going through in some areas. So, I mean, what's your kind of view on that? And maybe Tim, maybe we'll start with you.
Well, I would say I'm not surprised. I think we've been building up to this moment for a few years. I think clearly last year was a short pause as a result of COVID, but what that demonstrated was, you know, there was one, pent-up demand, and two, clearly COVID has demonstrated that fintech has been has had its accelerant moment. We've seen huge digital adoption, and I think that has really opened the eyes of what I would call, you know, many, you know, meaningful global growth investors who are starting to come into the market, in particular in Europe as well. I think UK and Israel have been two real beneficiaries of that. We're seeing some very significant funds, and you know, we felt the momentum towards the end of last year, but I must say the quarter that we've just gone through is one in which I've not seen since probably early 2000, late 99, Internet 1.0, when I guess the boot was on the other foot when we were building Betfair. But it is an extraordinary, you know, period. I think, though, you know, as a macro opportunity, there is, in our view, still a very long way to go in fintech in terms of where we are in the life cycle, and we are now also seeing some very significant businesses not being built that have been built, and I think that has really demonstrated to investors that it's not about building unicorns or decacorns, it's about building multi-decacorns, whether it's the likes of Klarna or Stripe or others. There are some hugely meaningful businesses being built, and as a result the market has become, you know, noisier, and that comes with advantages and disadvantages, which I'm sure we can talk about later.
Great, thank you. Ido, what's your sense around this?
Yeah, so I think that I mean, obviously when you know, COVID hit, you know, the first month or two were obviously hectic for everyone. There wasn't a lot of data coming out of the market, and you know, everybody was starting to prepare for a doomsday, and very fast, I think the entire and this is on a global basis, the entire ecosystem, and understood that, you know, there's more opportunity here than everybody thought. And what we've seen over the last year plus was really what the entire fintech ecosystem has been waiting for over a decade. And you know, the fintech lenders of the world, the insurtech and proptech you know, community all took it with two hands, and then really, you know, built up and showed not only the resiliency but the mainstream that everybody wanted to see, which obviously, you know, together with some macro trends, including the very low interest rate, had, you know, poured a lot of the capital coming into this ecosystem. And what we've seen over the last year is really companies delivering on the promise, which is, you know, which is a great testimonial. And I totally agree with Tim that we also are seeing only the beginning of what is a huge mega trend in terms of financial services that is here not only to stay, but will only accelerate with the digital adoption that we've seen over the past year plus in all aspects, including, of course, the financial services. So there are a few, you know, obviously obstacles around the way, but I think that as a mega trend, we are seeing only the beginning here.
Thanks. And well, I'm curious to get, you know, your perspective as well. And I think you also have a lot of background when it comes to very early stage and company building, right? I'm wondering how, you know, what's your view and kind of the very preliminary stages of some of these, you know, entrepreneurs looking to create big businesses.
So I think you can see a couple of things that happened during Corona, and for me, Corona year was also the year of opening a fund and fundraising. So I kind of represent both sides of seeing the opportunities, but also getting to build meaningful relationship with folks around the world on Zoom. I think, on the one hand, Israel has seen a record year in fundraising for startups during COVID. And it's amazing on one hand, but if you go into the numbers, you see that actually there's a drop of 35% in investments in early stage.
Yep.
Which means that people, I think in general, we're still looking for investments. Everybody remembers crises before, and I know it's a year of, it's always the opportunity. But at the same time, people wanted to play safe and wanted to invest in businesses that already have revenue. We've seen, the craziness of SPACs and basically taking companies public. But I think the early stage suffered a lot because in the time of crisis, people couldn't see the long thinking of, hey, we're investing in something very early. We'll have to see it through in the next couple of years without knowing if this pandemic is something that in Israel's case, we kind of went through it in a year and a half, or the rest of the world, which will still have to go through it in the next year or two. So on the one hand, we have opportunity for early stage. There's a vacuum, and as a fund, it's a great place to be. I think in the early stage side, the agility, the speed of the whole Israeli ecosystem really prevailed because most of the businesses here and most of the companies here in the technologies are basically SaaS-based. And I think it impacts the fintech world, but it impacts every part of business where a lot of the very established companies around the planet realize that they have gaps that they maybe didn't prioritize until now. But Corona basically demanded from every business around the planet to adapt, to be able to provide services online, to be able to do a lot of the business processes online. So all of this created a great trend and opportunity. Kind of to summarize, I think, as the Israeli ecosystem is SaaS-based, this was a golden year for us to even expedite development and expedite solutions. But also, I think because the crisis sent a lot of people home to think about how to rebuild, how to readdress business challenges, the early stage ecosystem now is blooming with solutions that have been created, have been thought about through the pandemic, and are just accelerating this whole process of old, well-established businesses that will either have to adapt or be crossed out, because we all understand that, after COVID, a lot of things are going to be in a different place than we were used to 2 years ago.
Yeah. That would be super exciting to see, as we hopefully slowly kind of emerge out of COVID in the world and see what new normal is. Yes, thank you. I wanted to ask, you gents, around maybe within kind of the fintech landscape, if there are any areas that you're kind of seeing, that you're looking at, that you think will be exciting, just to throw some, whether that's fintech or payments or sustainability, crypto, CBDCs, resilience, data, whatever it is. I mean, I'm wanting to be great to get your views on some exciting areas you may be kind of following. So maybe Tim, get your sense.
Yeah, I mean, I think all of the above. Really, I think for us as a fund, we've been looking to build more exposure in B2B. Clearly, payments and aspects of crypto interest us, less the specific tokens, more the infrastructure around crypto. Those are two areas that are particularly hot. I think there's a real polarization at the moment in fintech. We have some sectors that are seeing hugely inflated valuations, and then you have others that are a little bit unloved. And I think there's value to be had there. And obviously one needs very strong conviction on the other side if you're going to be going in at these heady valuations. And I think you're going to continue to see more and more capital go into those the areas which aren't particularly hot at the moment. I think you mentioned sustainability and climate. I think you always know when a space is starting to kind of build momentum, because I've seen more opportunities in that space in the last 6 months than I've seen in the previous 10 years. So there is I think everybody recognizes that there is a huge opportunity. There is a lot of institutional appetite, and there are a lot of people attacking it, whether it's looking at carbon trading, whether it's looking at indexes to for institutional investors to determine whether companies are truly ESG compliant and how ESG compliant are they. So there is a whole raft of on the periphery of fintech where you can, I think, see some interesting areas, but that feels quite early. But I think for the likes of Roy, I'm sure he's seeing some kind of interesting opportunities there. And I guess coming back to kind of the Israel specific question, I think what's been really interesting over the past kind of 12 to 18 months is you see some of these success stories come out of Israel in those areas where they have strong DNA, whether it's the likes of Rapid or even Lemonade and others. I think that really opens the eyes of the international investment community, and there are multiple stories coming out there. And I think continued focus on those kind of B2B SaaS areas is really where I think you're going to see Israel fintech continue to kind of thrive as well. And actually, from a competitive advantage point of view, I think COVID has allowed a lot more people to look at Israel saying, I can't get there physically, so I'm going to get there remotely, and as such have a much more open mind, because everybody's investing on Zoom now, and whether you're sitting in Tel Aviv or New York or London, it's somewhat irrelevant. So I think we're seeing much greater focus on Israel now, and people opening their eyes to the huge opportunity there. So I think this is going to prove to be a bit of a watershed moment for Israeli fintech in terms of broadening the base of investors.
Yeah, definitely. So there've definitely been some surprising areas coming out of Israel the last few years. InsurTech being one of them, with Lemonade and others, making great progress, and no longer purely B2B, but also, starting to see some real B2C offerings, which is something, kind of new, I guess, for Israel. I mean, Roy, how's it looking for you in terms of areas you're excited about?
Excited about that's a twist in the plot, but
you can talk about.
No.
Yeah,
I love to talk about what I'm excited about. No, I think I hope, and I'm trying to be an advocate for it. When you see Lemonade, when you see Hippo, you've got some amazing successes from Israeli founders who are basically, I would say, radically changing old-fashioned industries. But I still want to see more Israeli founders, and hopefully this pandemic has proved that the things we take for granted are not there, and to kind of look more for the blue ocean. And I think there's not enough building of solutions, products, infrastructure to support emerging markets, where I think on the fintech side is just fascinating. It's an blue ocean of opportunities. Look at the community of unbanked, look at the whole rebuilding of credit risk analysis. These are regions on the planet that need a lot of help, and they're open and will be much faster to adopt new technologies than the heavy regulated markets that we're used to. So if you ask me what I'm excited about, is to have 2-3 founders knock on my door and say, hey, we want to build emerging market fintech solutions, and I'll be the first one to support them and to help them run fast. Years in Indonesia, Brazil, even India, Africa. I think there's so many untapped markets. And through the pandemic, also in these markets, I think the openness of the old-fashioned corporates and institutions to play a game in technology has changed as well. They've also realized that they can just fly people over. So I think there's a lot of openness and readiness to bring those regions on the planet very quick, easy to develop, and easy to integrate solutions that I'm really looking forward to seeing.
Thank you. Yeah, and you don't. I mean, what's your sense?
Yeah, so I mean, on our side, I think what we've seen and what we really believe that, a huge wave that is already happening, but will only accelerate, is really, the entire embedded financial services that's happening. I mean, obviously, there's a lot of huge communities that are changing their way of, doing and consuming financial services. And I think that on the fintech company side, companies that would know how to take their financial services, embed them into, well-established, that already have like huge client bases, building on that could build, very large companies, and really leveraging their assets or the assets of both sides, and building, and monetizing much larger. So what we're really focused is on fintech solutions, from banking as a service to the B2B companies that are working on top of large client bases, including Amazon marketplaces and others that are really catering towards the new economy of digital retailers, building on financial solutions from the back end and leveraging the client base to build really good marginal businesses. We truly believe that these are huge markets, huge client bases, and from a time to market perspective, really reduces time to market to building large client bases, assuming you have the right products in place and the right, the right partnerships. So we're highly focused there, both on the financial services side. What we are seeing more and more is also on the insurance side, more embedded insurance products coming on top of client bases, which is also a great trend that's happening. Also in the payments space, which building on embedded financial or payment solutions for the payment healthcare systems, both in the UK, the US, and Australia. That's also building up to be very, successful businesses. And I think from an ROI perspective and marginal perspective, these are great businesses and are leveraging a lot of technology, not very, human-intensive businesses, and we really are, catering after these businesses these days.
Thanks. Yeah, as coming from HSBC, which obviously is a large financial institution with 240,000 employees in 60-odd geographies, it's the whole area of banking as a service and embedded finance, is one that I'm curious to see how large financial institutions will take what kind of role they'll pick up in that space. Because some of it currently may be perceived as cannibalizing or competing, just like, digital channels or challenger banks were, a while back. And I'm curious to see, and I'm sure they'll take part, in offering new and innovative solutions as well, working with fintechs together, to just offer better services for clients. I want to ask you, the three of you, through this past year, working whether from home or in offices, but not being able to see entrepreneurs, to see companies, to sit on boards, to sit in the trenches. And we've got representatives here looking at early stage entrepreneurs, some A's and B's, and Ido is also kind of probably looking at some later stage folks as well. I mean, how has that been working out as venture capitalists? Because it used to be face to face. We need to see people in the eyes. Tim, how is that for you? Kind of investing in a landscape. I've made investments recently in the past year in companies. I've never met the founders. They're in Hong Kong, right? For example. Which would be unimaginable. So how is there any sense and definitely any recommendations for entrepreneurs or companies, startups that are watching this of how to overcome this, how to gain trust?
Yeah, I think it's I've been acclimatizing, adapting. I must say, I think the first few months I would have been pretty reluctant. to sit there and say, right, we're going to be deploying actively over the next 12 months without meeting these founders if we've not met them for the first, if we haven't met them prior. So, I've had to adapt my style. I'm an intuitive investor, and I like getting to know founders, founding teams, getting into their office, getting to see the culture, the drive, the energy. And so it's really been tough. So I must say I've struggled, but I've adapted. But at the same time, I think I'm quite keen to get back to the old life in many respects. But I think it's opened my eyes to the ability to invest in a more geographically widespread. So I think that's certainly been helpful. I think in terms of managing the portfolio, on the one hand, it's created easier accessibility where Zoom board meetings have become the norm. But I think in times of we all know there are challenging times as well along the way, and I think getting in front of founders and having those difficult conversations and helping them through those kind of difficult issues, doing it remotely isn't optimal. To be frank, I think you need to kind of get in front of them. So I think that's that has been detrimental. But I think we've all as an industry adapted pretty well, and I think it does help when you are in a sector that is growing as quickly as it is. You don't really have choice to sit on your hands and do nothing. You have to adapt, you have to move, otherwise you're going to miss out. So I think we've all been forced to change our behaviors. I think some of them will stick for sure, and others will erode once we get to some kind of normality. And I think for founders, it's I'm kind of cognizant of what Roy had said in terms of startups, but it's generally it's never been a better time for founders to raise capital in this market. So it's certainly an opportunity for them to, if they've got a great business, to cherry pick the very best investors out there. I think if I can be a little bit controversial, one of the one of the frustrations, we are seeing what I would define as a lot of tourist money coming into the space as well, where people are coming in, let's call them kind of, hedge funds that none of us might have ever heard of, and throwing pretty outrageous amounts of money in, not always kind of backing up their term sheets. And I think founders need to be quite careful where they take their capital from as well. So I think there is a bit of that where, when you are in a hot market or aspects of the market are quite hot, you do see this money flooding. The question is that money going to stick, over the medium and long term? And, I would suggest a lot of it won't. And so that's been one of the negatives, I would say, from the last 12 months, seeing this flood of tourist money come in and distort the market in parts. That's not, that's not bitter. There are also some very strong investors putting in some big numbers as well. But as I said, I think we've seen a lot of hedge funds come into this market that have not necessarily covered themselves in glory as of yet. Let's see.
Thank you. Roy, as someone who's working with, very early stage where, as a seed investor, a lot of the times that's kind of really, really part of the founding team. I mean, how's that experience been for you, not being able to, sit in the trenches with, at such stages? Or what would you recommend some of the early stage folks to overcome this obstacle?
So I think it's split into two, and I actually had to sit in the last year on both seats, both the seat of the investor and both the seat of a founder that needs to raise money. So on the fundraising side, it's going to be an annoying answer, but at the end of the day, you need to raise funds, you need to do right by your company, adapt, get on as many calls as you can, build that skill. It's a skill we don't usually have, especially with early stage founders who want to convey who they are, which is their main selling point, rather than a more advanced business that just needs to show the charts and how much they're selling and what does it cost to sell. So I think it's a muscle we all have to develop. I've been accustomed to working remotely, working in a company like Google. You don't have the privilege of meeting people in person all the time, but it's very different when you're fundraising. When you're fundraising, I think there's a lot a lot of your personality needs to go through the Zoom call. A lot of what you believe in, a lot of how do you connect with the other side. So it's kind of a few things to drop out there for people to remember. Control the environment, control your presentation. Your presentation also includes if there's guests and people running around you, if there's noise, pay the respect to the person, to the audience in front of you. And the second thing you have to remember is because this is a digital platform, and this is especially important for Israelis, short sentences, wait for the reaction, wait to see what happens on the other side. You're building a relationship here. This is not a monologue. This is how you build the trust in the relationship. At the same kind of point, I don't think it's effective to work with founders and help them build a company over Zoom. Fortunately for us in Israel, we were never really locked down. So there was always the possibility of meeting, but maybe it's because I'm old, but I don't see the ability of taking a young team at their first kind of stages without being in the room, brainstorming together, thinking together, reading each other, and navigating through that. So hopefully all the limitations we have around the world are going to pass soon. Because again, it's when you work with a company that sells $1 million a month, it's a totally different meeting and helping them and supporting them than founders who are trying to build their MVP or are trying to take what they've built and really focus on the right next steps that they need to do. So don't be discouraged. We've all taken a route of as founders to prove ourselves, and the world is against us anyways, and the competition is against us. So I think the good will prevail out of this newly formed limitations. But if there's one thing I brought from America back to Israel is the discipline and the training you need to go through on this new medium of how do you sell, how do you present, and to be careful from the pitfall, because we all take, even today, we're all sitting in offices, we're all sitting in different places. It's important for us to control the environment, control the situation of this is the impression our investors will get from us. That's it. So controlling it and dealing with it professionally is something people have to take into.
Thanks. And Ido, maybe something brief from you, and then we'll move over to the next topic.
Yeah, sure. So I think for us, as global investors, given that we are investing, in Australia and the UK, in the US, I think what we found to be highly valuable is the ongoing relationships with the companies that we had previous to COVID. I think if I need to say one thing to the entrepreneurs is that I encourage them to keep on the ongoing relationships, with the VCs that they have started, and really encourage them to start the discussions really early, not necessarily to come, just when they need the capital raise, but rather than just, coming up, updating, putting on the updates. And I think for us, that was highly valuable because throughout COVID, a lot of the transactions, and we were highly active, were with either, existing portfolio companies or with previous relationships which we have met previously and had, found the right comfort to move forward without seeing them one more time, right? Obviously, we did do a few with very first and with founders that we haven't seen, but we really encourage and we found it highly valuable to maintain these ongoing relationships. And then just on a transactional level, it's a different story and you don't really need to meet face to face. So that's if I needed to sum that's one of the key valuables that I would put forward for entrepreneurs.
Thank you. So we have about 6-7 minutes left. Also like to invite the people watching, if there's any some feedback, any questions, you're welcome to put in the Q&A. Yeah, and so to our last kind of maybe briefly from each of us, each of you panelists is, what are you expecting in terms of the next 12, 18 months, whether that's in terms of whether the fundraising frenzy is going to continue, Are we going to see maybe some change in the environment? Maybe say something around SPACs and whether that you see that as investors, you see that as a viable exit route. Yeah, so maybe start, Tim.
Well, there's no sign of any let-up at the moment. I think the momentum is still very much with us. Clearly, there are parts of the market that arguably are overheating. We're watching quite closely as to what happens with crypto, whether that continues on that run. But I think, as I said earlier, for us, we said the same last year when perhaps the industry was, somewhat in the doldrums in the midst of COVID. There is a long-term opportunity here that we're all excited about, and the definition of success is not going to be, this year. We're going to see it over the coming years. So I think there's a lot to be enthused, excited about in the industry. I think it's great to see some of the new investors coming into the market and opening their eyes to European and Israeli fintech, and I think that a lot of that is going to stick as well. I think in terms of the exit environment, I think we have seen a huge number of SPACs listed in the US. I'm not sure that's going to be sustainable, to be honest. We're seeing fewer in Europe, Amsterdam, and they've made attempts in London to make some changes. But I think you will start to see a fair few zombie SPACs in 12 months' time as well. But ultimately, I think it is a means to an end. We saw eToro list quite successfully, and I've not been following its trading, but that's a pretty good outcome for Israeli tech or Israeli fintech as well. But ultimately, I don't think that is a trend that is sustained over the long term. But I think the big question for the public markets is the amount of capital now available to fintech companies at the later stage. The size of the rounds means that by the time these companies come to the public markets, if at all, a lot of that upside has been achieved. And so if you're an institutional retail public market investor, how do I benefit from the growth in this emerging sector? And that's a big challenge because they're going to miss out on the vast majority of these opportunities that are never going to come to the public markets. And that's something, I guess, from our side, we're trying to address by being publicly listed, but hopefully there'll be many other opportunities and platforms for others to invest in as well.
Thank you, Tim. Roy?
I am terrible at predicting things. 45 years of not being successful to predict anything, so I'm going to avoid that. Two things that I really want to see happen. One is a huge shift from, I would say, the more mature companies with a lot of money, not necessarily wise money, funding companies, helping companies get to ridiculous multipliers. So I would like to see, please, if anybody hears me, I'm kidding. But, do expect founders and companies to work harder on generating revenue, on generating value. These 40x, 50x multipliers are nuts in some cases. So we need some more sanity. And at the same time, I hope, and I can not predict, but I'm anticipating that as things kind of roll out and as COVID kind of mellows down and people are back to thinking long-term, long kind of perspectives on their investment, we're going to see more going back to the early stage with just tougher requirements on execute well, deliver value, prove that you have something real, prove that you can deliver value to your users. So those are kind of the two trends I would love to see. Because I do not predict a very sustainable way of keeping this multiplier frenzy and just exiting on everything that has a name, a brand, and a website. I don't think that's going to be sustainable for the long run.
Thank you. Ido, your perspective?
Yeah, so look, I think that, there's a lot of capital that came and is coming into the market, huge amounts of capital that is looking for growth. Actually, and given, the low interest rate environment and the macro trend, I don't see this changing in the near future, but what I do think is a huge obstacle is actually, delivering on that growth, meaning, and I think this is this would all come into play with respect, to talent. I think talent is becoming a scarcity, not only in Israel for sure, but globally. And there's a lot of capital that is looking for, for delivering on this growth. And you need a lot of people for that and a lot of talent for that. And I think that would be a huge obstacle over the next, 12, 18 months. Should the market, deliver on that, I think that the trend would continue. And if we start to see this, delivery promise fading away, I think, we'll be in a different environment. That's, I do not know to say how long it will take, obviously, but that's, I think, I needed to put the largest or, the obstacle, I believe that this would be it. I mean, delivering on it through the talent acquisition.
Thank you. Hi, Shane. We're actually just wrapping up. Can you hear us?
Yes, I apologize. I had a quick family car accident issue that I just had to take care of. So I just wanted to say hi, and I know I'm late, but
yeah,
it has been unfortunate.
Maybe,
my apologies for being
no worries. Yeah, it's everyone's accustomed to this network stuff and technology, and yeah, it happens. Maybe you wanna take a minute, just introduce yourself. Some of the panelists, some of the folks watching this just can reach out later if they have questions, etc. And then I don't know if Johnny's on, whether we wrap this up, but yeah, maybe we'll just introduce yourself for the benefit of those watching.
So thank you, everyone. My name is Shin. I'm a founding partner for Shorooq Partners, leading early stage tech-focused VC in the Middle East, North Africa, and Pakistan. So we look at seed up to Series A. We focus on fintech platform and software companies. We like to lead as much as also we like to follow if the co-investors are great. We have a bit more than 30 companies in our platform, and we're headquartered in Abu Dhabi with office in Dubai, Saudi, and Bahrain. So again, my apologies for joining late, but I wish that we can connect. So let me know how I can be supportive, and we can take it from there.
Thank you so much, and yeah, we'll just have to catch up on another panel. Yeah.
Thank you.
Yeah. So thank you everyone for the great discussion. Thank you for the panelists. It's really amazing times that to be investing in fintech, and I can see this coming from from a very large financial institution, and seeing the level of transformation around us and in the organization. It's just super exciting, and I have no doubt that the next 12-18 months will be just as yeah. So back to you, John. Thank you so much.
Thank you guys, and hi Shane. Sorry, I know it's part and parcel of these virtual events that we have issues. We've had them, but we've been navigating them okay actually. But I just want to thank our panelists